Welcome. As we approach 2025, the investment landscape looks more dynamic than ever. Dr. Carter, could you outline the major trends shaping investment strategies for the upcoming year?
Absolutely. We're seeing a decisive shift toward technology-driven sectors, such as artificial intelligence and green energy. According to a 2024 McKinsey report, AI-related stocks outperformed the S&P 500 by nearly 40%. Additionally, sustainable investing is now drawing record inflows, reflecting both ethical concerns and robust returns.
Interesting. But with markets evolving so rapidly, how can individual investors identify which trends are likely to offer long-term value rather than just short-term hype?
That's a critical question. Investors should distinguish between speculative bubbles and fundamental growth by examining financial statements, adoption rates, and regulatory signals. For example, while some crypto projects soared in 2021 only to collapse, others with clear use cases and institutional backing continued to thrive.
With that foundation, let's delve deeper into traditional assets, like stocks and bonds, and how their roles are shifting in modern portfolios. Stocks and bonds have long been the backbone of investment portfolios. In 2025, are their roles evolving, or do the classic principles still apply?
While the core principles of diversification remain, the risk profiles are shifting. Rising interest rates have put downward pressure on bonds, making shorter duration and inflation-protected securities more attractive. Meanwhile, stock investors are focusing on sectors with pricing power, such as healthcare and technology, to hedge against inflation.
That makes sense. How are investors balancing these assets, especially with the traditional 60-40 portfolio being questioned more frequently?
Great observation. There's a trend toward more flexible allocations. Some are adopting 70, 30, or even 80-20 stock-bond splits, especially among younger investors with higher risk tolerance. Additionally, alternative assets are being incorporated to enhance returns and reduce correlation with traditional markets.
Speaking of alternative assets, let's transition to real estate and cryptocurrencies, which are capturing significant attention as portfolio diversifiers. Real estate and cryptocurrencies have both been labeled as must-have assets in recent years. What are the main advantages and risks associated with including these in a 2025 portfolio?
Real estate offers relatively stable cash flows and acts as a hedge against inflation, especially in urban markets with housing shortages. However, barriers to entry and illiquidity can be challenging. Cryptocurrencies, on the other hand, provide high return potential but also extreme volatility. Bitcoin, for instance, swung over 60% in value during 2023 alone.
Given such volatility, how should investors assess their risk appetite before entering these markets?
Investors should start by allocating only a small portion, perhaps 5-10% to these alternatives. It's crucial to understand your time horizon and liquidity needs. For example, a young investor saving for retirement in 30 years might weather crypto swings more easily than someone nearing retirement.
That highlights the importance of tailoring strategies to individual goals. Next, let's explore actionable steps for beginners and advanced investors to navigate this complex landscape. For listeners eager to start investing or refine their approach, what practical steps should they take to build wealth and minimize risk in 2025?
First, set clear, measurable financial goals, whether it's saving for a home or retirement. Then, automate your investments via dollar-cost averaging to reduce the impact of market volatility. Studies show that consistent contributions outperform lump sum investing in turbulent markets.
And for those with more experience, are there advanced techniques or tools you recommend leveraging?
Definitely. Tools like robo-advisors offer algorithm-driven portfolio rebalancing, while tax-loss harvesting strategies can boost after-tax returns. Additionally, staying informed through financial news and research platforms can provide an edge, especially when markets react to global events.
Thanks for those insights. To wrap up, remember, investing like a pro in 2025 means staying adaptable, informed, and disciplined no matter your experience level.